What's going on, guys? This is Aaron from Departures Capital, and we're here with Dr. Arthur Halleran, President, CEO, and Director of Trillion Energy. It's a pleasure to have you on. Arthur, how are you doing today?
I'm doing very, very well, and thanks a lot for having me on your show.
Yes, of course. So I'm excited to talk about the company. Can you start by telling us about the SASB natural gas project for Europe and how you got the project into production so quickly? Because as we know, this is very important.
Yeah, so the SASB is an offshore gas field, offshore Turkey in the Black Sea. We picked it up in the year 2017, basically on a distress sale for pennies on the dollar. It has about $600 million infrastructure in place. We picked it up for 2.7 million. And since 2017, we've got engineering done, reports. We've raised all the money that we need to start drilling our program. So we have a 17 well program. And actually, just a couple of days ago, we finished our first well, and we have perforated it and tested it at 8.2 million cubic feet per day.
It's amazing how the market's changed and valuations were so low and you guys were able to capitalize on that. So that's great. Could you tell us about your predictions for natural gas prices for Turkey and how they've been affected by the conflict in the Ukraine and gas shortages in Europe?
Yeah, okay. And that's the reason why this project is quite good is Turkey, even before the invasion of the Ukraine by Russia, Turkey was always a high price environment. So we're always in the $8 to $9 an MCF, even though in those days Europe was, 4 to 5.
Mm-hmm.
And once the invasion happened, we then have gone up to our current price of $31 US an MCF. And I do not see, and even we just got a new pricing because we get priced every month, and it stayed at the $31 US per MCF, and is projected that it's going to carry the same through 2022 and also through 2023. And right now, there's a little bit of softening of the gas market in Europe, and it's because they say they got their storages nicely filled up and so on. But the real issue is that they have to start looking for gas now. A lot of it is liquefied natural gas, but they got to start looking at it for now and locking it in to purchase it for next year's winter season and so on. So the price of gas is going to stay fairly high. But regardless of that, our project was always economic, even at the $8 to $9. But we are getting $31 right now.
Yeah, and I think that's really important that it was economic before the whole thing happened, and that's great to know. So how does the shortages and high gas prices impact the SASB gas development?
Well, you can imagine that when we're doing it for $8 to $9 an MCF, we have some tough sledding because it was economic at the time, but people really weren't interested in Turkey and so on. And so we wanted to secure the rig because there's only one rig that can drill these wells in the Black Sea. We did a non-brokered private placement. We started in March. We went to the CSE, got our pricing locked in, got a bunch of orders. It was at 16.5 cents with a half a warrant at about 45 cents. And then the invasion happened and people saw that and the share price just skyrocketed when we got oversubscribed. But we brought in 18.5 million. 15 was from family and friends. The other 3 was through broker bankers. And then we did a brokered private placement at a higher value. And altogether, we raised the 41 million Canadian and 30 million US, which fully funds our 17 well program.
Yeah, congratulations on that. I know it's not easy to raise money, especially in this market, but of course, if the project makes sense, then you can get it done. So what's your plan to ramp up production for the SASB gas development, and how many wells will be brought online?
Yeah, so again, people ask why is this project so good and nobody has done it before? And the thing about this project, it was in 2007, 8 gas pools were discovered. Only 4 gas pools were put on production in 2007, 2011. And the other 4 gas pools were discovered, drilled, tested, and so on, but never put on production. And the reason for that is it's a directionally drilled, deviated wells. They were comfortable going 1.4, 1.8 kilometers out. These ones are 2.2 to 2.8 kilometers from the platform. And the idea is to drill from the platform, directionally drilled well, to the gas pool that's discovered, so there's no risk. And then you perforate it and you produce up the casing. So 45 to 48 days, drill, perforate, up the casing, and you get instant production right away and revenue. And so what we've done now is we have the 7 locations are for the reserves. We have another 10 locations, which are the development locations. And we just start drilling them 45 to 48 days, drill, complete, on production. And the wells will test between 7 to 10 million cubic feet per day. They'll come on production 4 to 5 million cubic feet per day. And if you look at a 5 million cubic feet per day well, we get 49% because our partner is 51%. That's 2.5 million hours. We get $30 an MCF. That's $30,000 a million. That's $75,000 a day, 30 days in a month. We're making $2.2 million US a month per well. We have 7 plus 10. So we're basically outlined between now and 2024 to just be putting a well on about a month and a half. And at the top, we'll be generating close to $24 million free cash flow, our 49% US per month.
Those are some pretty impressive figures. So you announced well results a few days ago. What were the results of your first well drillings in production?
Yeah, so the first well, we took the most challenging one to do, and again, is a directionally drilled long reach well. And so we drilled that on time, on budget, and on target. What I mean by target is we hit the reservoirs where we wanted to. And in that well, we encountered about 33 meters of gas sand. We perforated the lower 22 meters, which is not one sand, it's about 2 or 3 sands. So we perforated the lower 22 meters, did a production test, or a rate test, and we tested 7 to 8.2 million cubic feet per day. And we're right now in the process of doing a long-term production test to get a better idea of what the rate is. But we already know, because the other 4 fields that were discovered and produced before, we have all that analog data. And so it is a good well. It has fantastic porosity. And then after 4 or 5 years of producing the lower sands, we'll perforate the upper 11 sands. But that being said, we already knew what was going to be there, because there is no mystery in this. We're just basically putting on known gas reserves instead of drilling straight down and expensive subsea tie-ins and completion. We're just drilling from the platform and putting that on. So what I always tell everybody, it's actually a boring story, but boring makes money.
Yeah, and I mean, boring's okay when you're making as much money as you guys are going to be making. So, what does this equate for revenue for the company on a monthly basis, going back to those results that we just talked about?
Yeah, so what happens is in program A, which is 7 activities, 5 new wells, 2 recompletions, at today's price, we will be getting about 12 to 14 million dollars US free cash flow a month. That's us at the end of the 17 wells. We'll be getting 24 million dollars US free cash flow. And what I mean by free, that's after all the costs per month. And it's projected that by 2023, our EBITDA will be about 100 million US, and 2024 will be about 140 million US.
Those are some great figures. So do you have any analyst coverage to date? What are the price targets looking like?
Yeah, every month the Turkish government, through entity called BOTAS set the price. And so we were getting $31 last month, and we got notified the beginning of November. We'll also get $31 US and MCF this month. And it's projected that for the rest of 2022, we'll get the $31 an MCF all the way to 2023. And even if it softens a bit in Europe, it's projected that we'll stay at that price range. We had actually an analyst did the calculations for the EBITDA, and they actually give us a buy at they feel the shares should be a buy at $1.35, and right now we're at 44 cents. They lowered the price to about 18.5 to $20, and they still came up with over $100 million EBITDA. So we have a very large range of price range that we can actually go into.
That makes sense because you said the project was, you know, economically feasible before this whole thing happened at about $8 or $9, correct?
That's correct. And so that's what we were doing. We were at $8 to $9, and we were happily proceeding with this project. And the economics were, you know, with an NPV 10 of about $300 million US. And now at 3 times that price, we're up to almost $980 million Canadian. And that's just the price range, right?
Mm-hmm. No, that's great. So where should investors or prospective shareholders go for more information on the company?
So they can go on the website, the Trillion Energy website. And plus, they can Google Trillion Energy and also my name, Arthur Halleran. I have a lot of videos out there. And also, my phone number is on the bottom of every news release and is on as a contact phone number on the website. I do answer all the phone calls. I might end up have a bunch of missed calls and I'll get the numbers, but I usually make it I usually will phone them back and talk to the people so they can get information that way.
That's great, Arthur. And, you know, one final question as a summary. So what are the main selling points to investors as to why they should consider buying Trillion stock?
We are severely undervalued. We are sitting on the 17 program, proven gas. We're in a high price environment. We have a market that takes all the gas we want. The analysts say it's $1.35, and that's at 3 times our cash flow. And even with our large float out there, if you divide the NPV 10, we're up into the $2 range. And what I've always said was SASB actually is a company maker, because where you find gas, you'll always find more gas. So we talk of 17 locations, but there's tons of exploration and so on. But I just treat SASB as the cash engine that's going to fund larger, more exploration type stuff off the block. So it's a good time to get in right now because it's severely undervalued.
Well, thank you so much, Arthur, for all that information. You know, best of luck with everything, and we'll have you back on for more updates as business progresses.
Okay, great. Thanks. It's been fantastic.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stock because you heard it on here. Buy or sell stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.